Next up, we have our direct write-off method. And the question will have to tell you what method we use. I don't tell you here because it says it right here. Georgia company recorded a sale on account of $50,000 on December 20th, year 2. On July 5th, year 3, Georgia determined that the account receivable was uncollectible. Now, if this was the allowance method, we would increase our allowance for doubtful accounts. But because this is the bad debt expense write-off method, we immediately reduce accounts receivable by 50, increase bad debt expense by 50, write that off immediately. Journal entry to record the account balance of 50,000 is uncollectible. And same effect to the net accounts receivable, because under the allowance method, we'd have accounts receivable and then we'd have an increased allowance for doubtful accounts. So same net effect on net accounts receivable, but the actual asset is being changed in this one. Keep in mind the revenue recorded in year 2 is not properly matched to the bad debt expense that is recorded in year 3. That's one of the issues there and why I like the allowance method better. Next up, we are using the percentage of AR method to determine allowance for doubtful, right? Remember, we use the percentage of AR or percentage of sales when we are dealing with our allowance method. Now, Cairo Station Inc. utilizes a percentage of uncollectibles based on the year-end balance and accounts receivable. We know we are dealing with the percentage of uncollectible, the percentage of AR method. Company estimates that the balance in the allowance account to be 3% of the year-end AR of $200,000. The existing balance in the allowance account before the adjustment is a $3,000 credit. So what they're saying here is that we had 200 in AR. Then we had 3,000 in allowance for doubtful. So we had net AR of 197. Great. But what this is asking is how many more adjustments do we need to make? Well, let's see. 3% of $200,000 is 6,000. We already have 3,000 in our credit balance. So we just need 3,000 more to account for more allowance for doubtful accounts or allowance for uncollectible accounts. Same thing. So we just need 3,000 more. Now, what if this had said a debit instead of a credit? Okay, well, that would have been displaying this essentially. Now, I know it's not his natural account and it looks weird, right? But let's just say it had a debit. The answer now would have been 9,000 because we need to reduce it by 3 to get it to 0, and then an additional 6 to get it to -6, to credit to 6 for a total credit, a total allowance for uncollectible accounts of 6,000. That's to reduce our AR and get it to our proper net balance.